May profits be upon you. How you doing? I hope you had breakfast. Listen, I need some coffee. Look, we're going to take a look at pound USD. We're going to look at the sterling, right? Let's take a look at the RT money meter first. The RT money meter tracks the rate of change of each individual currency from a futures perspective over a period of 15 weeks, which is about 3 months. And I update it every week, particularly on weekends, because the strength does not change over the weekend. All right. So what am I looking at? I'm looking at USD. Last week it was at 941. 941, ranked number one, of course. It's been strongest of all the currencies for a couple of months. This week, though, it slipped down to 6.89. 6.89. Still the strongest of the currencies, but it did take a bit of a pullback, right? And I just want you to understand that's exactly what it is. It's been trending up, strong uptrend, still a strong uptrend. And it is just retracing. That's all. Doesn't mean it's a reversal. When it breaks structure to the downside, then we can go, oh, okay, wait a minute, we got a little we have the beginnings of a reversal there. That's when you start thinking that. All right, not now. Okay, now the pound, on the other hand, it was at minus 932 last week, and this week it ticked up. It is trending up. All right, to minus 799. Still pretty weak now, relatively weak. But in a downtrend, because it's been in a long slogging kind of downtrend, right? Just like with the Dixie, only the inverse, it's just pulling up. It's just retracing, all right? Once it starts to break structure, then we can say, oh, we got a full reversal going. Oh my God, but that's not happening right now. All right, we're just retracing after an impulse. After every impulse comes a correction, right? Come on, just relax. So let's take a look at the chart. All right, now just quickly, look at the monthly. Is there any doubt with these monthly candles that price is in a downtrend? All right, that's a lot of momentum to the downside. Let's move on to the weekly. Week after week of a low being made and a low being taken out, all right, by a new low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, breaking that low, right? Daily. What do we got? The daily price action is very clean. I like clean price action. Price comes dropping down. Got this little correction, and then we drop down for a lower low, right? And then we come up, sweeping that high. But this is only facilitating a deeper retracement because this was pretty shallow, right? We come down, we come up, and then we break that low. A lower low again, a lower high again, a lower low again. Now we're going to get down to business on the 4 hour, okay? So all the high time frames are pointing at a bearish market, hence this big arrow here. All right, let's take a minute to acknowledge the fact that we have news coming for the USD FOMC on Wednesday the 27th. That could shake markets. They're talking about they're fluctuating now where there's conflicting conversational rumors going on that, oh, we're going to raise it 75 percentage points. Oh, wait a minute, the jobs report, oh, the numbers were pretty decent there. Maybe we can make just a 50% rate hike. We'll see. So this is going to be an important event. Look at how the market moved to the side here. All right. We had this nice bullish move, right? And price has been sideways since. Okay. Thursday, we had some numbers come in for a pound that were favorable to the currency, pushing it up. Friday's close was a bearish one, but you see the buyers are still present with that wick. All right. They're still fighting the good fight. We did not make a new low. Ha ha. Okay. With this push up, we took liquidity over here, but the close did not break this line here, right? That's significant. That is significant. All right. Why? Because for me, it's supply. All right. And supply has not broken yet. Okay. So we're in supply right here. 1, 2, 3, 4. We still haven't gotten past a close past the median threshold. All right. The middle point of this zone. Okay. Keep that. That's something to keep in mind. I think that's something to note, worthy of note. Okay. Also, here was demand. All right. Why was it demand? Because it took out highs. It took liquidity, right? You know, this is a decent demand, and you can see how it held here. Blah, 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 blah. All right. We didn't get a close below it. So why am I pointing that out? All right. Make note, this is the top of the trading range. This is the bottom of the trading range. Just extend the lines over and you'll see that on the daily, this was the lower high. This was the lower low. Got it? On the daily time frame. So this is the daily trading range. All right. And this is the 50% mark, the all important 50% mark. I would look for shorts in the premium prices, not the discount prices. It has to get above the 50% mark for me to look for high probability trades to the downside. Okay. And we are sideways. Do I want to take a trade from here? No, because we're in consolidation and price could go up a little bit and then come back down a little bit, go up a little bit. You don't want to get caught in that cycle, right? This is the supply, the next stop on this train. All right, price is like a train that runs between stations, supply and demand. All right, we are at demand right now. All right, we bounce off of demand right now, but we are in supply. Remember that. Okay, if supply gets violated with a close of a candle body close above the supply, then we have violated it. We took it out. That means I can look for buys. All right. I wait for price to come back to the demand that is left for a higher probability trade to the upside. All right. This goes against the larger trends. All right. The larger trend is bearish, but this is a higher probability trade. Once demand is taken out, you wait for it to come back to the opposing, demand zone. When supply is taken out, you look for the demand that's responsible for it, the one that's left behind, and you take that high probability trade to the upside. That's when I would take trades to the upside. That's when I would take buys. All right, because I believe up until Wednesday, the US dollar may show some weakness, which allows pound to come up to this zone of supply where I will look for my pattern to take down. All right, to resume the overall trend, which is bearish, and a pro trend trade is a high probability trade. Okay. Now, for those who want to jump into sells, I would wait until this demand zone is taken out with a body close below it. All right, boom, right? Wait till price comes back to the demand zone that is left behind, the supply zone that is left behind, to take a high probability trade to the downside. All right. I won't have to wait until it gets to the 50% mark. It might be, the market might say, we're close enough here. All right. If it starts taking out demand, I know that I can take sells. I hope you can follow what I just wrote, what I've just put down. I hope you're picking up what I'm putting down. Okay. All right. But there are signs that we can take longs here after this lower high was taken out before it made the lower before it made the lower low. It was broken here. So I'm looking for price. It came back into the imbalance here. And now we may be on our way up. We might struggle bust all the way up. And then we can take a short from here. So wait for it, wait for it, wait for it. That's all I'm saying. Wait for it. I think the odds are that we'll be looking for a buy as price shows weakness. This is an intraday trade. All right. Look for a 15-minute confirmation. Should price come down to the zone again, look for 15-minute confirmation, and we can take it on up. All right. But don't take shorts. I wouldn't take shorts until this is violated. All right. And I wouldn't take longs until I see this violated, or we come back down and I get a 15-minute, this is aggressive, a 15-minute confirmation, and I'll take it up. That's aggressive. It's an intraday trade. Intraday trade. Okay. But wait for some confirmation down here. Look for the pattern, and then you can take it up. Okay. I will see you in the next video. Hey, I'm leaving some videos on your screen right now. I'm putting them all on a playlist, all the analysis that I'm putting out today. So you can just hit play once and just let YouTube automatically start your next video. I'll see you in the next one. All right. Do smash the like button. Do not forget to smash that like button, man. And also leave a comment. I want to hear from you. See you in the next one.